Hey, good morning everybody, it's Brian. Hope you're doing well today. I'm just gonna run through the numbers real quickly and then kind of get on with it. Not a whole lot to talk about for the day, it's Friday. We've got some news coming up over here. News. So used to saying that over the course of every day this week. We don't have any news coming up today that's high impact. We do have durable goods reports coming out, but the big red reports, which were kind of stemming around key people, namely Mr. Powell, giving testimony in Congress and in front of the House this week. Today is the first day we haven't had any red on the calendar, so no high impact stuff to start us off for the day that we need to worry about. Of course, with that said, we do have the markets pre-market or in quite a bit of a sell-off. We'll get to that here in just a second, but nothing for us to worry about when we're looking at potential forex trades or needing to stay out of the market for anything as the day gets rolling for the futures markets either. So that's nice, kind of the first hurdle over. We have clear sailing for the entire day as far as executing our plans and not having to worry about staying out. So let's pop over here and have a look at what we're looking at for the day. In the forex side of things, the pound's been kind of a big mover, but it's been all over the place. It's it started out up, sold off, and now has been pulling back here to the midpoint. The currencies that I'd be watching for the day here as the new session gets going is the CAD and the euro. So the euro versus the CAD. We've moved right at half of what its typical range is. It's moved 50 pips on the day, and its range is closer to that 90 pip range. So, the nice steady movement. They've been kind of trading together, not a whole lot of divergence, early on, but as the day gets going here in the U.S. session, if we continue to see this euro sell, be a weaker currency in relation to the others, and we start seeing this Canadian continue to move to strength, that'll be a great opportunity to post a trade up here where we can sell the euro against the CAD, and that would be in the direction that we're seeing our volume detail as well. So that's looking really, I'll just blow this up a little bit, looking pretty good to me as a potential tradable opportunity. Of course, it's got a lot of movement even prior to the breakout box occurring here prior to the new session beginning. So I don't want to get too antsy. We'll let it do its thing as the box paints. It'll paint wherever the new market opens, and then we'll have that box around that opening period, and we can make a decision if we want to still sell that at that point. But right now, just looking at the currency strength, that's the one that really stands out to me, the currency pairing that stands out. We can also look at the euro versus the USD. However, it's not quite as volatile. The USD has been heavily bought, the euro has been falling here. But if we look at the euro USD currency pairing, it's moved 58 pips for the day, and its average is into the 70 to 85 pip range. So is there opportunity for it to move? Yeah, maybe, but I think you've got better opportunity on the euro versus the CAD just looking at average ranges. So that's what I'm looking at here for the day on that one. Popping over here to the futures market. We'll hit this one really quickly and then just kind of wrap it up and let you guys go. Futures market is still in a big sell-off here. The 4 hour is down, the 30-minute is down as well. So we're looking at a sell bias. We're opening below where the market closed yesterday. We're opening down. Of course, in the last 30 minutes, there's been a bit of a rally here. But what that tells us is based on the bias, we're still looking to go short on the ES, on the S&P. So how would we do that? Well, we can just simply, we know the direction of the bias, you want to be short, so we just wait for the market to pull back, giving us higher lows and higher highs, and then as that market turns, we can sell off of that as it breaks back through in the direction of its current trend. If it doesn't come back and it just keeps rallying for the day, then we're not in a trade, and that's okay. And then at that point, our lines would have crossed, and we'd have a mixed bias, and we have to figure out what we're doing for the days going forward until we get a confirmed bias again. But for right now, market still is showing us a downward bias. Other ways of trading it would be to look for pullbacks. You know, if we pull back to this 3250 area, we could look to sell off of that. 3270 is a key area. We saw it yesterday, came right to that number and then reversed on us. 3220 has been a big support level. We talked about that one yesterday as well. 3220. So, you know, just watching kind of where we are and seeing if we get some movement around that. So if we break back below 3220 and close below it, that could be that other signal to look shorter as well. So if you're looking for breakouts, you might look down here at this bottom, you know, 3210, and see if we break that. Even 3200, a break of that could be the place to go short. But obviously the favored way of trading that would be to wait for the market to pull back and then letting it break back down through in the direction of the current bias through a previously closed higher low and higher high, right? Crude, same, we've got a mixed bias over here. Crude's been kind of manic on, it's just been all over the place. 4-hour bias is still technically short, 30-minute bias is long. That tells us, hey, let's sit on our hands and not do anything with crude. Let's just move on. Over here on gold, same thing, exact same process. What are we looking for here? We can see we've got a short bias on gold, so we're short gold on the 4-hour, 30 minutes in agreement to short gold as well. So we'd be looking for shorts in that case. The way we'd watch that is we'd wait for this to make higher lows and higher highs, and then sell as it breaks back down through that higher low. Other ways of looking at gold would be we've got a top up here. Oops, there we go. We've got a top right up here at 1880. So, you know, that's definitely been a big resistance point for us. We can see how it's bounced off of that quite a few times. So 1880 is certainly a resistance point. So we could certainly watch, and you know, if gold floats back up to this 1870, 1880, we could look for sells off of that if you're looking for bounce trades. Or you know, if we really break down and break below 1850, that could be the spot to look for breakouts on a shorter period. But I think the safest bet, safest way to trade it, be consistent, is just, you know, looking at your market bias here, waiting for it to make higher lows, higher highs, and then selling as it breaks back through. Don't overthink it. Don't try to front run it. Just let the market do what it's doing, and if it just keeps running, then it keeps running. We're not on a trade, and that's okay. You know, so that's I think that's what we're looking for here in these markets this week. So that is it for me. I'm going to let it go here. I feel like, you know, this last week there's been a lot of trading opportunities that, you know, just weren't there for us. I say trading opportunities that weren't there. There just weren't trading opportunities for us during the times that I trade in these sessions. A lot of news going on. Today's the first day without news. You know, I'm pretty optimistic that we'll have some opportunities that'll pop up that we can talk about. So if we have some trades, we'll put them on. We'll talk about a market recap later in and roll from there. All right, so that's it. Have a great day. Bye.